Going to take a step back and just go through what PFLD is. And this is another rules-based strategy here on the AAM ETF platform, honing in on the U.S. preferred securities landscape. And essentially our selection universe for this portfolio is the entire U.S. preferred securities market, exchange-listed preferreds, and over-the-counter preferreds. Those $1,000 pars are included in that selection universe. So as far as the duration risk goes, from that selection universe, PFLD's tracking index will incorporate two filters. One is that duration risk screen, which kind of goes back to your original question regarding that. PFLD's tracking index is going to remove any preferred stocks that have a duration above that of 5 years. But for the other side of the fence, and even an interest rate environment where rates are lowering, PFLD actually has another screen within its portfolio where PFLD will screen out any preferreds that are trading 5% above their face value. So in a lowering interest rate environment where preferreds, which tend to have call options attached to them, that call risk tends to ramp up during times of lowering interest rates and increases reinvestment risk in that regard. So as far as interest rate risk goes from both sides of the fence, not just rising rates, but lowering rates, PFLD is pretty multi-purpose in that regard. So as far as its exposure goes, I mentioned, we're filtering from that initial universe of just, retail and OTC preferreds. And most of its exposure right now is within that what's known as a pretty desirable area of the preferred market, that OTC $1,000 par market. Close to 75% of its portfolio can be found in that particular space. So those types of securities tend to be variable rate in terms of their coupon structure. And that, again, is just another kind of side component of what makes PFLD from a duration risk, from a duration management risk standpoint.